VMC stock. This is Vulcan Materials Company. And this is just one I want to take a look at because they're talking about $1 trillion infrastructure spending package. And so Vulcan Materials, I took a look at their balance sheet and it's not great. I mean, their cash to current liabilities was like a quarter or something like that. So their balance sheet is not awesome. And um, yeah, they're not doing that well, I guess. Uh, fundamentally, but this 1 trillion for infrastructure that they're looking at right now is just kind of a start, I guess, of the plan to uh, just for Congress to spend on U.S. infrastructure, which is is interesting. It's interesting, but Vulcan Materials, they do kind of construction aggregates. So I guess their biggest thing is concrete. They do concrete for government projects, and so this is a huge target, probably one of the top targets to get a ton of contracts and money from a big infrastructure project like that. And so none of that has gone through yet, and uh, there's been a little bit of talk about it, and I don't know if this move is in response to the Fed wanting to buy bonds or if it's the talk about the infrastructure stuff. But this is definitely a stock to watch over the next month or something to see if this infrastructure thing goes through or doesn't. So, I mean, if this stock kind of hypes up and then the infrastructure thing doesn't go through, it could be a good kind of shorting thing. Or if it swings down, if there's a market swing down and this thing swings down with it, um, it could be a good spot to kind of go long before the infrastructure thing happens. And so I haven't seen. Let's do. Haven't seen exactly what the Fed is supposed to be buying with their individual stock picking, or not stocks, but bonds, corporate bonds. But I mean, my best guess, and this is not investment advice, but my best guess on that is that they're just trying to keep the banks functioning. And I did see a note from Jeff Snyder that there's a bunch more treasury and cash trading nonsense, similar to repo market kind of stuff that's going on now. So I think that's actually what they're targeting is um, some, yeah, just some problems going on with the U.S. banks right now with regards to liquidity. And I think they're uh, just setting up a new avenue for them to make sure they can get liquidity to the U.S. banks, as opposed to the huge move over the last, couple months ago was to get a bunch of liquidity to all the international banks. I think they're looking at the U.S. banks right now at that individual bond buying move. I don't think they're just trying to pick stocks and play with things directly. Like that's not what I think they're doing. People are saying they're like, just gonna try to float individual stocks and stuff like that, or that's gonna push more liquidity into the stock market. That's a move they have in place to kind of pad the landing of a drop or something, or to try to help a liquidity squeeze. So I don't really see that announcement today as like a bunch of new money coming on the market right now. Well, they haven't changed anything in terms of their buying sheets, and they're just waiting right now. And they said if the functioning of the banking system improves, they're going to be decreasing their balance. Well, not decreasing the balance sheet, but lowering the amount they're increasing it by, I guess. Um, but yeah, the Fed is just giving themselves tools, I guess, new tools, borderline illegal tools, whatever, to just kind of address things that might happen soon. But I want to take a look at, let's do the RSI on, let's go to SPX. SPX is a good one. It goes way back. let's get out to the weekly, do a super long look at the whole stock market, and this will be a cool look at some bubbles and some RSI readings on the weekly. And so this is a super, super long-term kind of overbought, oversold thing. And we can see where we are on this. This is the purple one down here is the RSI. So if we go way back, I mean, we can go all the way back to the Great Depression and start there and kind of look at the RSI readings. Here, let's do the Dow for like the Great Depression, and then I guess the Nasdaq on the Nasdaq bubble, and then we can switch to the S&P for the newer stuff. So as far as overbought and oversold, everyone says, like, oh, it's overbought, so that's like a peak and sell it or something like that. But let's look at the actual bubbles and see what it actually does, because it might surprise. So I mean, it can be overbought quite a lot on a flat area on the way up, and then on a bubble, like here is the max overbought way before the peak, and then the peak comes here on this one, which is still near the top edge of the range, and then you can see a bunch of action around the bottom edge of the range, and this last one was where it actually bottomed out, and then here we get overbought, and then here lower, and then here lower, right, and then you get under here. So just when you're looking at drops, this is pretty common thing, is you go overbought on the way up, and then you come down, and then you find a peak that's inside of the range, and then you drop out of the bottom of the range. And so the bottom, one or two hits maybe is where it bottoms out, but usually the nominal top is kind of in this area of the range, not the high peak back here. It's in here. And yeah, just looking at the Dow, I don't know if there's any other really good drops here. 40s. Here's a little tiny drop. But here again, you can see the way overbought is back here on the way up. And then you get a peak in here inside the range, and then you get a drop down. And that's what the RSI does quite often, is the nominal peak is kind of in the top half of this range usually, and then the actual drop happens in the bottom half here, and then you break out of the bottom of this range. And so yeah, here's the run up from World War II up to, and this is not adjusted for inflation, but this was a huge run up in the stock market that people don't usually point out, up into the 60s. And then we have this super stagflation period here from 66 over to like 82. And everyone says this trended sideways, but if you adjust this for inflation, like 66 is a huge peak in stock market versus the value of the dollar with inflation adjusted. And this is a huge crash from 66 down to 82 is a big crash. Not that that is useful for the RSI reading, but I just think that's kind of interesting. And here around 82, like this super steep run up here, this is where we start going up the everything bubble around 82, and you can see the trend line just kind of switches into a much higher angled trend line, and that's our everything bubble trend line starting back here in 82, running up this way. And so let me switch over to the Nasdaq. Yeah, so here's the Nasdaq bubble on the Nasdaq index, and this is the .com bubble around 2000. And I haven't ever looked at the RSI, the long one on this one. So yeah, here you can see a bunch of overbought on the way up, and then this last overbought peak that's way up is before the peak, and then you get a lower one that's up at that peak, and then you get a lower one that's still at a pretty high nominal peak. This is still high, and then from here down is a crash, and then you get low action and low bottoms, and it keeps going down on the low bottoms. So that's kind of a look again at the same kind of thing where the nominal peak is not always a super high point where the actual market crashes down from here. Like going from a super high peak to kind of a peak in this range is often sideways or up actually on the actual chart. And then going from the top half here down to the bottom half here, that's when you get the actual crash. And you can see that in this one. And then let's just go ahead to the S&P. Yeah, so this is the SPX 500 with all my crazy stuff drawn on it. But this doesn't go back to .com. But here you can see on the S&P over the housing bubble here. Once again, we have our top overbought on the way up. And then you get a lower one and a lower one. And this is a higher nominal peak here. This is the highest nominal peak. And then once again, yeah, we're in the top half here, switching into the bottom half here. And that's a drop. And then we get another kind of high nominal peak on the top half here, down to here, and that's a big drop on the chart. And so that's kind of where the RSI maps to the actual nominal prices on the chart. And then actually this is actually the lowest bottom here, just like this move, which is interesting to see. So you can see that almost similar to looking at like the looking at the MACD. You know, when you're on the top half of the MACD, that's kind of like bullish territory where it's easy to get higher highs. And the RSI is kind of similar. So, I mean, even as the RSI goes down and down and down, those can be higher and higher and higher nominal peaks on the actual price trading. And it's when you switch from the top half of the chart down to the bottom half of the chart that you actually get the crashes in the market. And so I want to go take a look. I haven't done this analysis. Let's take a look at our situation here and see what the actual RSI is telling us. So back here, this is Volmageddon, and so it was way overbought at Volmageddon, and it only crashed down to the middle. And I mean, Volmageddon got a decent drop here, and then you can see a lower peak here with a higher nominal peak on the chart. And this actually did cross into low, but it didn't break. And so that's a big drop on the actual chart from the top half to the bottom half. And this looks like a big drop, but it didn't really drop that much because it went from the top half to still kind of on the top half here during Volmageddon. And then here we went from oversold on the top half. And you can see the big peak here is before, and this lower one here is actually a higher peak. So that's kind of how the overbought maps to this stuff. I mean, this move from here to here is actually going up to a higher peak on the chart. And then you get your move from the top half of the chart all the way, whoa, huge down to the bottom. This is very rare to go all the way from overbought to oversold in one move. Like, that's absolutely insane. And then you can see where we are here. We're back on the top half of the chart. And we're going to see if this is a peak or not. But if this is a peak, moving from the top half of the chart down to the bottom half of the chart is how you get a decent down move in the market. And it doesn't have to be from way overbought to way oversold. It's really just moving from the top half to the bottom half to get a move down. And then I guess just looking at our trend lines here, just check it out on the weekly, is where we are on this, just this shorter trend line off of Volmageddon. So out of this Volmageddon bottom, we have a support line that runs up, and this is where we back tested on the way down. We did a little back test, we did a really good back test, and now we swung all the way over and tested it again. And so that's the kind of look right now, is to see if this rejection off of this line, whoa, what is that, like a magnet or something? That's super ugly. If this rejection here is gonna backtest and take us down to the next trend line, and this is the 12-year bull support line that goes all the way back to the financial crisis crash. And this yellow line here is only the 2-year line that goes back to the Volmageddon bottom. But it's quite common when you test these lines to test them twice in a bubble before you get down. And on the RSI, I mean, you can see that double peaks are common and single peaks are kind of common. And I don't know if this counts as double peak or not. But yeah, you can see this, goes down, and it on the RSI puts in a higher nominal peak. And so we're down closer to the mid-range here. So it's possible to get a higher nominal peak sideways or down from here on the RSI. I don't have the magnet on. I don't know why it's drawing so sloppy. But this looks like, well, it looks like it's kind of already double peakish enough to be a double peak, really. But yeah, I mean, you can see there's some triple peaks, some double peaks, some single peaks. It's kind of crazy, but it's really important to look at the peaks on big crashes like Volmageddon and like the financial crisis and things like that. And 2 peaks is just a really common thing on the RSI before a big move down. And so that's kind of what we're looking for here. And we really have already completed that enough for it to be a double peak in terms of the RSI. But what I was really looking for on the chart is to double test this line as a really good spot to take a short position. And I don't know if we're gonna, I mean, we are making a move now. I mean, it broke down. Yeah, look at this. Okay, so, I mean, we broke down here below these moving averages, and that started looking really unlikely to double test like way up here on this Volmageddon line. But now, why did it do that? That's an interesting move. Yeah, so everyone's talking about, the Fed came out announcing they're going to buy a bunch of stuff up. So everyone's like, yeah, the Fed's just kind of blowing the market up and then it's going to just go crazy. And I mean, for me, I was just looking at this as a pretty normal kind of expanded flat. I had a video yesterday where I had a target pretty close to here, but not as a spot for continuation. Oops. As a spot for or I'm sorry, not a, I was looking for like a bare, just a flat, an expanded flat, as a spot to move down. But this shape is not telling us anything really. Yeah, I mean, this kind of shape could be a break in either direction, and it probably has a little bit more to go, maybe over to like here or something before it would break. But I mean, this is just kind of like a pennant that doesn't really give away a direction of what it's trying to do. So I guess kind of still in no man's land. I mean, I sold a lot of my shorts here, just looking to see. That's a big enough move down that I wanted to go ahead and sell some shorts, but I don't know if this is high enough a position to try to add shorts or not. I really want to get back here and do this thing, man. Because if we do double test this, or like, we got sort of this island top here, and now we've retraced high enough into this island top where technically it's vague. I mean, this is not what you want to see as an island top sort of move down. This big retracement and then this whole thing. That's not good for the island top case here. And then also, this doesn't look as island toppy to me as it does to other people. I mean, if you go out to like the smaller candles or like the SPX where it's all choppy, it looks like an island top. But here, you have kind of a gap up here, and this move is a choppy, sloping thing that covers the gap right there, and then you have kind of a gap here, and that gap has obviously been covered. And so I'm not really seeing any kind of island. I'm not seeing the same island top that everyone else is talking about. I mean, I think that we have two gaps here and here that already got filled. And here we have, this is a pennant that I guess that would probably be 60-40 bullish, just on the just on the shape of the pennant. Like pennants continue more often than reverse, although we're in the middle of kind of this thing, so it doesn't really, the pennants don't really tell you which way they're going to break. They just kind of set up something that will move soon, but doesn't really tell you the direction. But that's really what I'm looking for, and for adding shorts is this is what I'm looking for, is a test of this, and probably wouldn't get another flat one like that. Like I would expect kind of like a break. Like if we break above this thing, I want to short, and that short is targeting a break of this line here, and you'd break and kind of backtest this one. That's kind of the short position that I want to look at getting on. And so the RSI is a good tool to try to figure out where we are, and not on the hourly because the hourly is crazy, but yeah, I mean it might help to kind of, let's go ahead and swing through the RSIs and see what they look like. Out on the daily. So we got oversold, and then if we get another peak in here that's lower, and then we reverse down, that's a bearish move kind of in the shorter term. And here we've already crossed and gone back up. So I've never really kind of drilled down through the RSIs like this on shorter times, but we're on the top half. Basically on all the RSIs, we're on the top half. And yeah, so that's pretty cool. So just kind of a watch on the RSIs, just moving. Yeah, I mean, when we're on like the, whatever this one is, 30-minute chart, like a move from the top half to the bottom half would be a bearish move, but only like one little move for today or something like that. But we do have this kind of setup across weekly, daily, hourlies, where we are on kind of this top half of the chart on all of them. And so I can see a bearish setup here for sure, as far as the chart goes, which would get a legit bear move. And that's just what I've been saying. Kind of upper half to bottom half here. And not what everyone always says, which is like, oh, we're up here overbought, so now you short everything, because that's not how it usually plays out. Like you get higher and higher and higher kind of peaks, but it's when you switch sides of the chart from top to bottom. It definitely doesn't need to be way overbought to way oversold. Like this lower peak to like here is a huge move. So that's a look at the RSI and a look at some concrete. And I don't know when we're going to get more news on the infrastructure bill, but I expect that to go through. I mean, I was listening to Powell talk today, and he didn't say much. He said they're really not changing their plans, and like every other person that interviewed him is asking if he's recommending that, about grants or government spending, and he had to explain to every other congressperson that was talking to him, like, you guys are the Congress, like you guys make the spending bills, not us. Like he had to tell that to almost every one of them. Like, why do you keep asking him that question? Like the Fed does not write the spending bills. They just buy the treasuries, after the Congress after the Congress writes the spending bills. Um, And a few people are asking him about supporting the market and that, and he gave the same response as they always do. Like, the Fed's job is not to support the market. The Fed's job is to keep the banks operating. And that is true. He's not lying about that. That's the Fed's job. They're trying to keep the banks functioning. And that's what I think this bond thing is all about, is we're getting some weird activity with the banks and with the lending markets, and that's what the bond buying is about. And so I think there is risk right now of a, not like a worldwide liquidity squeeze like we had last time, but I think there's the risk of a U.S. liquidity squeeze coming on now that they're getting ready for. So I'll go do some other companies related to this infrastructure bill. Like, I think Caterpillar's another big one. Let me do that one next, and I'll do some more indicators on this chart and talk about Powell some more. So this is not investment advice. Happy trading. That subscribe button, that kind of stuff. And cheers.